Hi, it's Charlie giving you Monday's market video. I hope you're very well. Had an email come in, it was actually a week or so ago now, from a trader saying this. There's a lot out there on how much you should risk per trade, but not a lot on how much you should risk per day. And again, little on percentage target earnings per day, i.e. when do you stop if you're winning. So I thought this would be a really good subject to cover off on a Monday video, because it is a really tough one. Because how much do you risk per day? Do you get to a point where you stop trading, or what do you do? And it's interesting actually, because I was talking to an automated trader last week actually, and this is a great subject matter. Because if, let's for argument's sake, say you risk, we'll just do a typical 1% of your account per trade. Okay, so you risk 1% per trade, and you're just having a bad day and you have 5 losers in a day. Well, it's 5%. It's a fair amount to lose in a single day if you're risking 1% per trade. So at what point do you stop trading? So that's the first question. And but interestingly, so if you're a discretionary trader, you have to make that decision. And quite often we give a general rule of thumb that as a day trader you have 3 strikes and you're out. So if you have 3 losers in a row, you're out. If you're a discretionary trader, that is. So discretionary trader is someone who makes their own decisions. They use market analysis in order to assess the market, and coupled with some strategies, and then makes a decision to then trade. Now that's slightly different if you're following something like an automated trading strategy, or if we call it a mechanical setup, where you trade a specific pattern, and you trade that pattern from, let's say, 8 a.m. till 4 p.m. and all of your testing and everything else is very, very logical and defined. You have a specific pattern, and every time that pattern comes along you take that trade. Well, I believe that it's a slightly different scenario if you're a discretionary trader to that of if you are a out and out mechanical type trader. Because coming back to the conversation I had last week, when you've got a system, the system doesn't say, oh, I've had 3 losers so far today, I'm going to stop trading. I mean, it can be programmed that way, but the system doesn't say, oh, I've had 2 losers, or I don't know about this next trade, maybe I'll just hesitate and watch this one. The system just takes the trades. All of the time the setups are there. Now that can be a bad thing as well, because the system could carry on trading and go and have 5 losers in a row. But if you have a system, a mechanical strategy, let's say, it doesn't have to be automated, but let's say you follow a mechanical setup, then which you've had tested and it gives you XYZ results, well, you have to trade it. You have to carry on trading it, because, and I'll just bring a fresh pen up, if you don't, and you go and have, let's say, 2 losers in a row, and then you decide, oh, I don't want to trade it anymore, or maybe even 3 losers in a row. And what happens is, if then it actually offers up two trades in the afternoon, for argument's sake, and both of those are winners. Well, you've elected to stop trading at this point, only for then the system, the strategy, to actually give you 2 potential winners, which would have meant that, well, you would have only been marginally down for the day, and therefore it could massively affect your results if you're trading a mechanical strategy and then decide to stop trading. So I think if you trade a mechanical strategy, you should carry on trading according to the rules. So if you've tested your strategy between X, Y, and Z hours, then you should trade it between those hours. Within your testing, you should know what the maximum drawdown has ever been. What the max drawdown has ever been. So you should know what that is, and therefore be able to plan for that. So some strategies just don't have that many losing trades in a row, or and so whereas others might do. You might test it, and you might say, wow, yeah, on one day back in X, Y, and Z it actually had 7 losers in a row. And so then coming back to it, how much to risk. So then you say, okay, well, if I was to have, and I know it will be very rare, but if I was to have 7 losers in a row, I don't want to be trading 1% at risk per trade. then you know you can then start catering for where your comfort level is and say, right, okay, well, 1% per risk per trade is too much, too rich for the strategy that I'm trading, because I know that now and again this could happen. So what I'm going to do is I'm going to trade at, whatever it might be, 0.75, zero point 0.5, whatever the level is, and so that's how you know what your risk is going to be and your risk per day. So from a mechanical strategy, well, really you've tested it, you should trade it that way. Now, if you, however, are a discretionary trader, which is what I am, then I think you do have different set of parameters, because you are reacting to the market a bit more. And I think if you're that type of trader, then yes, having something like a 3-strike rule and then you're out, then you can just forget about it, because you're not trying to follow such a mechanical strategy whereby the next trade that comes along that might be a winner, you then kick yourself because you didn't take the trade because you hit your 3-strike rule and you weren't allowed to take any more and everything else. So when you're a discretionary trader, it's a lot easier to say, okay, I've got a 3-strike rule and that's it. So hopefully that's answering the first part of that question. So only you can know what that level is going to be that you feel that, okay, your maximum loss can be in any one day, and so then you are just you put it around there. But certainly from a trading perspective, if you're a discretionary trader, a 3-strike rule is not a bad idea. But having said that, do I employ that myself? Not really, no, because there's been days when I've had 3 losing trades in a row, and then I've taken a 4th trade and it's made up for the majority of the losses because I trade with higher risk reward types trades. So, but if I had to offer advice to newer traders, then I think 3-strike rule is not a bad idea. As you develop a thicker skin, then you can cope with having 3 losers in a row and it not affecting your mentality too much. So, your emotions, so you can trade differently. So it's different piece of advice depending on your level as a trader, and only you can know the answer to that. Now, with regards to knowing when to stop when you're winning, again, only you can know the answer to that. But one thing I would say is you don't have to stop. You don't have to stop, because what you can do is, let's say you have 1 winning trade, then you have another winning trade, and you're doing really well for the day. So you've had 2 nice winning trades, and you're saying, okay, well, do I really even need to trade? Well, that's one question. But what you can do is, let's use some easy multiples. So let's say you made £50 on this trade and £50 on this trade, so you're up £100 now in total at this point. And for argument's sake, you've got a rough rule of thumb that your daily target is, let's say, £80. So you've superseded that with your £100 that you've made so far today. And so what I would always say is you can actually carry on trading. But what you do on the next trade is you only risk, let's say, a maximum of 30% of the gains that you've made so far. So if you only risk a maximum of 30% of the gains that you've made so far, then you know that whatever happens, you're still going to come out with £70. So rather than carrying on trading and then potentially giving all of those gains back, because that emotionally can be really hard for traders when they've been up quite a lot and give it all back, you know that you're only going to give back a small percentage of it, or a percentage of it, and whatever happens, you'll still have made 70. But if that next trade does win, then all of a sudden you might find yourself up 140. So it's a bonus then if you've done even better then. So, but it keeps you in the game. You don't then give back all of your funds on that next trade, but at least you're still participating. So that would be my advice. So with regards to when to stop, but there must be ultimately a point where you'd say, do you know what, I've had enough anyway, and only you can know the answer to that. So you have to just build that into your trading. Hopefully that's answered that question there to that individual trader, and maybe given some food for thought to some others. And one thing I would say is that there really aren't, so I've got that on a 5-minute chart to put onto a daily chart. This Eurodollar's choppy, isn't it? I don't think there's any one single right answer, because everybody trades differently. Different traders trade with different types of trading plans and different levels of thickness of skin, and different levels of tolerance. and different strategies. And so it is a very personal thing, but hopefully I've given some food for thought there. I shall be back on Friday.